Welcome to Kaizen Time, part of the Blood, Sweat, and Business podcast, where we provide constant improvement to businesses through timely, actionable financial solutions. Do you want answers to your financial questions? Email us at bsb@kaizencpas.com. I'm your host, Mark Valesky. Now let's get started. Welcome to another episode of Kaizen Time. I'm joined by Pierre, our senior manager and mentor. Pierre.
Hey, Mark.
I've worked with you for years now.
Oh, sorry to hear that.
It's not. Honestly, it's a lot better than you think it is. But I will say I do work with some people who've gone to jail.
Yeah.
For appropriate reasons. It's not like it was, not like they were thrown there by mistake.
They were framed.
Yeah, they weren't framed. Anyway, point is, what tax issues will get you thrown in jail?
Okay, great question. Everybody. It's funny that people are afraid of the IRS because they think they're going to go to jail. And that's not the real problem. The IRS has a large job to do, and they're working for us to try to collect the taxes based on the rules. So one of the things that people misunderstand is mistakes won't make you go to jail, but willful intent will.
So let's talk about the first things first. What is the difference between a mistake and a willful intent?
So a mistake is you just did the math wrong. You forgot to put you forgot that you worked the first week of the year and you forgot that W-2, right? Because you thought you only worked last year and you had a new job. You forgot that there was a 1 week W-2. You hadn't worked there in a whole year and you forget to put that one on there. That's a mistake.
Okay.
You work for a job and you don't report any of the income and you hide it or you lie to the IRS about the amount of dollars that you put on. That's willful. Mm-hmm. And that's the difference between possible jail and mistake.
I want to get these out right away. What's the most common mistake you see, and what's the most willful?
Definitely the most willful is lying. Taking deductions that you don't have, mm-hmm. maybe reporting income that you don't have either. Mm-hmm. Just thinking you're pulling the wool over the eyes of the government and you're winning. By not paying taxes.
So a good example would be that boat we discussed before. Hey, I'm going to take a deduction on this boat, even though this boat has nothing to do with anything.
Yes.
You're like, I work in a desert. You're like, nice boat. What are you using? Sand surfing?
It might flood.
Good.
Like that's a pretty big reach. But it's willful intent. And in that case, you're clearly trying to make something deductible that is not an ordinary necessary business offense, business deduction expense. And that's what will get you in trouble. Okay. Now, you say, will one time put you in jail? Probably not. But if you repeatedly do it, that shows willful intent. If every year you buy another boat, they're going to say, hey.
And we're talking, first time after you've been busted.
Yes.
Right? Like they catch you. Now, again, remember, once you've been busted, you're on the radar.
Yes.
For a long time.
And not only that, once they're busted, they can go back a number of years. And especially if you defrauded the government or your taxes understated by 20%, they can go back 7 years.
I was about to say, and so they keep track of everything for 7 years. That's my understanding.
In theory. But they don't have to because they will request that information from you again. It cracks me up when you have an audit from the IRS especially, and they say, we need copies of your last 3 tax returns, and you think, okay, you know where they have a copy? At the IRS. And you do a transcript and you get it from them. And oftentimes the agent will be like, yeah, it's just easier to have you give me the copy that you have than for me to go and get it from our archives.
Isn't it boggling?
Just cracks me up.
It is boggling.
And then, you go to the client, it's like, I don't have that anymore. So, luckily we do, but if they weren't our client the year before, and that tax return doesn't exist in our files or 2 years ago and they need it, we go to the IRS and we get a transcript, thereby doing what you think they would obviously have the capability. And they do. Like if you say we don't have it, they will then do that. It's trying to make the process quicker and easier for them.
Mind-boggling that going 4 extra steps is somehow saving time.
Yeah. Well, generally accountants do keep all their stuff right there.
Yeah.
But like I said, if you're going back 3 years and they've only been a client for 1, I probably don't have 3 years ago.
Well, and here's the other thing, Pierre, that I just want to throw down, and this isn't some type of sales pitch to go to an accounting firm or whatever, but when you use an accounting firm, right, or any type of CPA, automatically there is a level of, hey, this has gone through a professional. They have gone through, they have gone, so there is a level of, hey, a professional is doing this. Not that we don't have to check it, but it has gone through a check, as opposed to, again, I'm a desert specialist. Here's my boat receipt. For some reason, it's in there.
It's funny when you have friends who aren't your clients, but they ask you questions about taxes. Happens all the time. I tend to not tell people what I do, because if we're on a jog, you tell them, guess what we're talking about for the next 45 minutes of this run. It's about how their taxes are messed up. But anyway, so a lot of times my favorite question, and this is not to bash TurboTax or anything like that, but I always get the response, TurboTax, let me take that deduction. I was like, okay, great. Well, so obviously you didn't tell TurboTax all the facts to this. You just said, hey, can I do this? And they're like, yeah, that is allowed, but not for you. Classic example. You can deduct cat food. Did you know that?
Sounds great.
So you know how you have to have cat food as a deduction? It better be used in your manufacturing process. But most likely, if you have a feral cat, or wild cat that you don't name, you don't let in your house, and you just keep it in your barn to keep mice from eating your feed, you can deduct that cat food because it's part of your business.
That makes perfect sense.
So TurboTax said I can deduct cat food. Yeah, for that person, not for you with your 19 cats and you spend $3,000 a month on cat food.
This is a great story, by the way.
I have a friend. This is a true story. This is a true story. I had to look it up because he said, well, the cat doesn't come in the house. It just protects our feed. And ordinary and necessary, the cat food for them. It'd be like and the
cat is a working animal.
Yeah, it is. And so I was like, you can, if you have to get shots for that cat or whatever, but if you get audited and the auditor comes to your house and that cat's sitting in the living room with Tabby and there's toys all over you're going to lose the audit. Yep. And that's the example where TurboTax is not wrong. You just didn't tell it that it was your domestic cat. And that's why I use that example.
And to be honest, TurboTax isn't really asking either.
Yeah.
It's like, oh, you want to write off cat food? Have a great time.
Yeah, cat food, yeah. I don't know what cat food is. Excellent. Great choice.
All right, so getting back to what is the most common mistake then that people are making?
Common mistake we talk about all the time is just forgetting a report or something comes in late. Okay. Like classic is not picking up that W-2 from a prior job, or not. Oh, I didn't start this job yet. I started the job this year. Well, actually, you just started in December, and they're also giving you a W-2. It's just, it didn't come in the mail. You forgot about it. If you forget your W-2 for the job you had the whole year, gosh, you're on the fringe of
that's a hard sell.
That's a hard sell.
Yep.
But people make mistakes. Stuff gets lost in the mail. A lot of investment activity. If you don't have a brokerage account and you just do some trades yourself, you might miss one. But the IRS is going to get all those reports, and the CP2000 is going to match them. And they're going to say, hey, wait, you have this one, and this one. That it doesn't equal your total. You're missing one. And it's a mistake. I don't think you did it intentionally. You just missed that paperwork, forgot you made that trade. Say you only made 3 trades a year, and you thought you only made 2, but you actually made 4. That's a very common mistake.
Yep. What about, there's one that I really want to ask about, and it's like mid-year taxes. Is there anything for that? Like people get dinged for it, for not doing it. So, for example, you're a small business. You don't make a ton of money. Maybe your small business is just your side business, right? It's a couple thousand, maybe 10,000, let's say. And you're supposed to give them mid-year taxes, right? What's the penalty look like for that?
So the IRS does allow you to, as long as you pay 100% of prior year's tax if your income is low enough, and you pay it equally throughout the year, then they're not going to penalize you. Oh, okay. And you do get a penalty, and they basically use Form 2210, and it says you made $1,000 in the first quarter. You made $9,000 in the second quarter. You made $2,000 in the third quarter, and you made $10,000 in the last quarter. It doesn't make you pay a lot of tax at the beginning of the year. It says, oh, you only made $1,000. That you should have paid not 1/4 of your tax. You should have paid this much at that time, and it runs that calculation. So you talk about mid-tax. You're halfway through, and you haven't made a half year's worth of your income. All your income comes in December because you sell Christmas items, right?
Makes perfect sense.
you have nothing. Or the classic is you're a landscaper and it doesn't snow. You have no income in winter. Yep. You have nothing. You shouldn't be paying tax based on the fact that you had a tremendous snowy fall and a lot of jobs, right? Economy is bad, no snow. You have no income, no income, no income. You're probably on unemployment too. None of that, but then you have earnings in the last part of the year. They don't tax you on the first part of the year. So they do give you some wiggle room. But that's why you want to say, hey, give me last year's tax. Let me pay a quarter. Then I'm safe. All right? Unless you think, gosh, we don't have that business line anymore. We don't do anything, and there's no way I'm going to have any money. But we don't want to be in that business of guessing that precisely when your income isn't that large. Okay. That's why W-2s have withholding. Those, you call it mid-year tax. These are mid-week tax, right? They want you to pay it when you have the money.
Yep.
And they give you time. Like, there's no withholding if you don't have a job. Think of the same thing. If you don't have a job till June, you don't have to pay any tax till June. You get a job June 1st, that week, they want you to pay some of your tax because you had income that time. Same thing.
Makes sense. All right, getting back to going to jail, or avoiding jail as some people like to, but is there one, like, hey, have you ever seen somebody do something so bad, first offense, and they have gone to jail for it?
No, I have not. There are plenty of court cases that you can see it. It's funny. I only know one person. Let me rephrase. I know two people who went to jail for tax fraud. And it wasn't even tax fraud. It was mostly theft. And
theft?
Yeah. So, and then not reporting it too. So
Okay.
you can get double ding. But you can go to jail for one wrong tax return if you knowingly filed a false return. If you did it on purpose, right? So a lot of people say, I haven't filed in them years. Why didn't you file? You know, well, I had to take care of my parents who were sick. COVID wouldn't let me have a job. I didn't have any income. And it turns out you did. That's knowingly not filing, and you can get in trouble for that. But if you have some reasonable...
Like a life event.
Yeah, a life event or something that prevents you, you're not going to jail for it. But if you just didn't file, say did somebody win the billions of dollars the other day in the
lottery?
Yeah.
Okay.
If you win that and you don't report your tax return, you're probably going to jail for that because you're not reporting $1 billion of income. You could go to jail. I don't know if they'll make you that example, but they might. You know. So, but if you have $1 billion, you can get some lawyers to help you.
You probably could probably help with that too. So is there anything that the IRS treats as more severe?
Yes.
The lottery, for example.
The number one, no, the lottery is not the more severe. They're just jealous that you won it and they didn't. No, I that's speculating. The IRS agents think that way. The worst thing you can do is mishandle payroll taxes. So payroll taxes that a company collects is not your money. It is the employee's money that on behalf of the government, you're withholding from their paycheck. They earned it. You withheld it from their paycheck. It's their money. And you kept it over here until you filed your payroll tax return and submitted it. So if I'm taking your money, what do you think that is? That's stealing. And people still have it in the bank account of the company. Oh, no, this is company money. No, it's not. You paid it to them on a wage. You reported it on their paycheck. You reported it on their W-2. Now you've stolen it from them. And you do have a fiduciary responsibility to withhold this money and pay it to the government. And that is a terrible offense.
Well, and I know Brian Bride here, he has brought it up many times because he does payroll. They are fast on that one.
Yeah.
Like there's many things they are not quick on, but they watch this one like a hawk because there's far more paperwork. It's easier to draw the connections, right? But they are on top of payroll.
They can match, and it's to protect the employee. And a lot of companies do it. So they're trying to prevent it. Right? You don't put a guardrail up by your surf shop in the desert. You put a guardrail where people keep driving off.
Yeah.
Right? Same thing. You go after the payroll taxes because it's the company thinks it's my money. I didn't pay it. It's in my bank account because it's from the sales we had. Yeah, but you paid it to them and withheld it. It's not your money anymore.
And on top of it, too, like, it has to get fixed right away.
Yeah.
That's the other big thing. Yep. Like, because the longer it goes without getting fixed, the more of a problem it's going to be. And the more correction that has to be done by the employer and the employee.
And not only that, now you look bad in front of the employee. You look bad in front of your fellow coworkers that maybe it didn't even affect that. It affect one employee, but not all of them. And you make the accounting firm look bad. You look bad. Everybody's mad at you. And especially that employee is now going to go tell all their family, all their friends, everybody, those people steal from you. And you don't want that. It's not a good thing. Make sure you pay over your payroll tax.
As we wrap up, what do you want to tell people who may be thinking, oh no, what's going to happen to me?
Yeah. So a lot of people hide from the IRS thinking they don't know where you are. I've known people who, not that they were on the run, but they just happen to be moving for other reasons. The kids are retired. They want to move back near their family or whatever. And, the IRS hasn't contacted me. Well, you know what? It's because they don't know where you are because you keep moving, okay? So that's one thing. But don't think they can't find you, right? Especially
every transaction you do,
everything you do, they know where you are now. So while you can travel, like you could fly to Boston for the weekend and spend money there. It doesn't mean you moved there. So they don't automatically think, oh, Mark has gone to Boston. Let's go find him there. They're not after you that much, and you didn't file a tax return. You might not file a tax return. If you injure your shoulder and you can't work for a year and you don't have any money coming in, you do not have to file a tax return. Right. So it's not an automatic, hey, they didn't file a tax return. They filed a tax return last year. Let's go get them. But then when the W-2 comes in and you didn't file it, they're going to come and knock on your door. So I would say be honest with the IRS when they're there. I would prefer that you have a middle person, meaning an accountant in between, because the accountant, whether you're right or wrong, the accountant gives you a chance to say, hold on, agent, let me go find out if they have that. Rather than if you're in an interview with an agent, and I had one guy, I was going to talk about getting murdered. Forget about going to jail. Your accountant almost murdered you because he lied to the agent right in front of both of us. And I frankly didn't know what to do at that point. I said, hold on, can we have a minute here? I just need to let me talk. The agent on hold. The agent was in my office. He was right here in this building. And he said something, let's not go into the details. He said something that I didn't think was true. And I knew her next reaction was going to be, okay, I need to get another agent with a gun, and we're going to your house right now to see it. I was like, I've been to your house. I don't think you have that. So I said, hold on, let me, can I take a minute? I just want to ask him a few questions. I took him out there, and he's like, yeah, I don't have that. I was like, why did you tell her that? She's going to get an agent, and we're going to your house right now. The only delay is they just got to have an agent that's around here that has a gun. She didn't have a gun, and she wouldn't go to a house with just being the taxpayer because we might have buried her in the backyard. I don't think we would, but she wouldn't. And so we come back in, and I was like, here we go. We're going with the biggest show I got. And I was like, yeah, I think he misunderstood your question. And I said, I don't think he has it there. I think we need to re-answer that question for you. Would you ask it again? And he said, no, I don't have it there. But she was going to get an agent, and they were going to go to her house, and we would have been at his house with him caught in a lie, and it was a big dollar lie too. And he could have been arrested for that right then and there.
Like right on the spot.
They didn't bring the gun to arrest him. They brought the gun to protection. Hey, come onto my farm, and I'll show you where it's down there in the well. Look closer. And that was the most scared I am. But it was all caused because if he just said, I made a mistake, and that's what we admitted. We're like, no, we made a mistake, and he didn't go to jail. But that was the scariest I ever thought. Like, you just lied to the IRS right in front of him. That was crazy dumb. So I don't like to have them in the same room. Sometimes that happens. And most people don't. And he just thought that was the answer they wanted to hear. And it turned into a disaster.
Fair.
So don't lie to the IRS.
Lie to the IRS.
You can make mistakes. We can find that. Oh, yeah, we put it on there wrong. And they can get corrected. We typed it wrong. But you lied to them right to their face. I didn't think he thought they would go to their house. I was like, I guess we're going to your house.
All right. Anything else you want to add, Pierre?
That's all I got today.
All right, perfect. Thank you. You've been listening to Kaizen Time, part of the Blood, Sweat, and Business podcast. If you like what you heard, subscribe and leave a 5-star review. This podcast has been brought to you by Kaizen CPAs Plus Advisors, providing advisory and accounting services to help you grow your business. Learn more at kaizencpas.com or email us at bsb@kaizencpas.com.